So the price for oil is very mean, as I was saying. Over time, you're about in the middle of the average top side and bottom side range. So you're not getting any sentiment across the wires, any sentiment bias that is saying, okay, well, we should really, really buy oil, or we should really, really sell oil. And that's why it's teetering somewhere in the middle. So it's useful, therefore, to zoom in a little bit and just have a look. You can see you've got rejection on your weekly at that key moving average there, and some minor resistance, minor historic price action, somewhat over there, not a lot of it. And the current candle, which you're seeing push, also isn't doing much. Okay, it's very, very thin. Yes, we are only on Monday, but you can see you're not bursting out on the Monday open. You're just slightly up into very early resistance. So I wouldn't be shocked if this crumbles a little bit, to be honest, at least until here. But like I said, you've got absolutely no momentum down or up. So I don't think in the it's particularly likely to go like that or that tomorrow. The only thing I would do in this case is plan new entries. Because that was weak resistance, I'm not really interested in re-shorting that at all. So I would be out. I would only really consider scaling in at key price action levels lower. So that's where all these candle wicks exist within this sort of medium term uptrend. So you've been coming up since December. It's not an awfully long time, but it's fairly significant. That is where I'd rather long, because the probability of a bounce is much higher. But if you don't know when to exit, you will fail. Okay, just bear that in mind. We teach price action so much because price action pertains to entries and exits, because often entries and exits overlap. Once you're in it at one point and you exit another, it's likely you'll enter at the next point and exit at the former. Okay, if you change your bias the other way. So entries and exits are always going to come hand in hand, but they're all time frame relevant. Okay, they're all time frame relevant. So if you don't understand the correlation of all time frames, then you will struggle, which is why we go over it so much. So to the long side, I think OPEC would keep it propped. They want a mean price. You've seen that in market sentiment. You've seen that in news. We want to keep it at X value and not too high, not too low. Keep it stable, if you like. More coffee. I think to the upside, you would really need something viciously extreme, but I can't see the extreme short side case unless you get there. I mean, if you suddenly get inflation returning, you might find that there's an energy crisis or something like that. But again, it would be absolutely extreme. So I would only focus really on the long side case for oil. I would only look at shorting it on extreme moves to about $90. The reason why is because if you pop up your higher time frames again, people, I would say the core of what I teach and what we teach, myself and my co-founder, co-mentor Alex Sorrow, has been teaching for years and years and years, trades himself for income, like me. We're looking for some clue as to where you could fall, and the point I've labelled here clearly was preferred short. So that is a reference point. It's not always particularly you've got orders sitting there like lots of people say. I mean, there probably are many orders sitting there on an institutional scale, but even behind that, the reason for the orders is simply because that's a preferred short entry price. It's an area where it's clearly preferred short. It's not preferred long because it didn't blow through. All right. If it blew through, it would be preferred long, but clearly it's not. Your stock oscillator is coming into overbought, so you're trickling up, no real strength, no real weakness. So yeah, if you're going to short it, I'd really, really hold off till $90+. If you want to buy it, you could buy it with the near-term uptrend. I don't think that's going to be harmful, in my opinion, at least. That would come in line with your earlier trend MAs and key price action. So a really good light tech zone for anyone wanting to scale in. But again, if you don't get risk, that is going to be really, really difficult, because your size is going to be absolutely disproportionate to the reality of, or the probability of, the market. Of course, we teach that, like I said, underneath. So